Hello everyone, welcome to our business news broadcast on the AEL. My name is Eric.
My name is Sina.
Firstly, the highlight in the foreign exchange market is that the dollar holds near 10 weeks low ahead of the inflation report. The US dollar hit a 2-month lower earlier in the New York session, then stability around this level on the Thursday afternoon and eve of the US consumer price data, as the inventors bet that rising inflation could erode the currency's value.
In recent years, rising inflation expectations have helped the dollar because investors assume the Federal Reserve would hike interest in rise in response to higher prices. That is no longer the case.
A disappointing employment report last week targeted a widespread sell-off in the greenback. And through the sugar commodity price have raised concern of the higher inflation. Market believes that Fed would keep its commitment to low rate and heavy asset purchase.
People are fearful that Fed means what they say, and what they are saying is, we are not going to raise rates, but also we are going to let the inflation room, said Andy Brenner, head of international field income at Nathaniel Securities.
Against the basket of its major rival, the dollar dropped as low as 89.979, its lowest since Feb 25, and was less down 0.11% at 20.138.
Even if we see a trend above expectations tomorrow, the likelihood of robust dollar rally is very much lessened by the fact that fewer market participants experience the Fed for react to that number in any way. Satkara Stramata, Chief Market Strategist at Cambridge Global Payments.
Do you know these things?
Yes, and I think it's very disappointing.
What do you think caused this situation?
I think there are three reasons for this communication weakness of the U.S. economy and the community interpretation of those expectations and the easing of risk, a reason such as the pandemic.
How do you see the future of the dollar?
At present, the factors leading to the decline of the dollar index remain unchanged, so the dollar is expected to remain weak for a long time to come.
Okay, thank you.
You are welcome. Next up, we'll move to the stock market. The topic is Asia shares at 1 month lows as share of extends on inflation anxiety.
Asian share for the second strategy session on Wednesdays to 1 month loss, as the inventory speculate surging commodity price and growing inflationary pressures in the United States could lead to earlier rate hike and higher bond yield globally.
MSCI's purchase index in Asia Pacific shares outside Japan Friday 0.5% after climbing 1.6% on Saturday for the biggest daily percentage drop since March 20.
The investment analyst for XM, Mr. Harris, said there isn't clear catalyst behind this purchase.
It seems to be a combination of inflation fuel marking a comeback and some market participations moving higher along the value spectrum, cutting the exposure to anything with a straight valuation. At 682 points, the regional index is not too far from a record high of 745.89, touched in February and still up 3% this year so far. on top of a 19% jump in 2020 and a real 16% rise in 2019.
Shares in China opened in the red with the blue chip index of 0.2%. Australian stocks slipped 0.6%, while South Korea's index skipped 0.7%. Japan's Nikkei received the early gain to be down 0.4%. However, analysts double the sell-off would extend much further in the world of the accommodative policy and the fiscal logic.
Overnight on Wall Street, technology stocks were among the biggest losers, so the tech-focused Nasdaq reversed the bulk of the early 2% decline over the course of the day. The DOW dropped 1.4% and the S&P 400 fell 0.9%.
The equity rout barely helped drive any safe haven flows into the greenback, even as the future pointed to the yet another negative open for the Wall Street. In mini future for the S&P 500 nudged 0.3% lower in the earlier Asian trading.
What is unusual about the next 2 days is that the equity markets again did not provide the US dollar with a notable lift, said Evan Ting Tang, head of Asian FX strategy of RBC Capital Markets.
The Tang said there was no sign of the risk-off among the regional currencies, as with the high-carry Indian rupees and the Indonesian rupiahs largely holding their ground.
Tang added, still is not yet obvious if the signifies a new market paradigm. Assessing one swallow does not make a summer.
All eyes now on the U.S. Consumer Price Index report to be released by the U.S. Labor Department on the Wednesday, with the market-based measure of the inflation expectation having moved higher.
Treasury rates have remained stuck to a light range. The yield on benchmark 10 years Treasuries edged lower to 1.6235%. A far cry from the 2% level seen before the coronavirus pandemic.
The U.S. Federal Reserve expects higher inflation, though officially have pointed to transient factors and base effects for the temporary rise.
So, hi, do you know these things?
Yes, of course.
So how do you think about these things?
As I know, because of the COVID-19, the global economy will have the decline. So I think this phenomenon is very simple. All the book stock will decrease their value. So it just affects any countries, but some countries is stable, like China. So China is very good to deal with the COVID-19.
Yeah. So how did these things affect you?
These things will affect all of the stockers. Affect the company, affect shareholder, all the people in the economy. Just like in the United States, just like the unemployment rate, it will increase very suddenly, right? So, for me, I have bought some stock about that. Like I bought the Pinduoduo before.
Yeah.
And I knew that in last year it had a very suddenly increase. It increased about 15%. But just for this year, it decreased. And it loses its value. It's just like the news.
开始。
这就是我是的 ABC。